Hello everyone, welcome to Investment IQ Insights. We're all about giving you the knowledge and tools you need to become a smarter, more confident investor. Whether you're just starting out or you've been in the game for a while, we're here to help you make your money work as hard as you do. Today we're diving deep into the world of Warren Buffett, the Oracle of Omaha himself, and we're going to look at 10 stocks to build wealth the Warren Buffett way. He's a legend in the investment world, known for his incredible track record of picking winning stocks and building wealth over the long term. The 10 stocks covered in this video are currently in Berkshire Hathaway's portfolio and were handpicked by Buffett himself. We are going to discuss those 10 top picks, try to understand why he invested in them, and see what lessons we can learn from his selections. But before we jump in, make sure you hit that subscribe button and turn on notifications. That way, you won't miss out on any of our future videos, where we uncover more investment secrets, personal finance tips, and strategies to help you achieve financial freedom. Let's get started. First up, we've got Apple, stock symbol AAPL, the tech giant that needs no introduction. Apple is actually Berkshire Hathaway's largest holding, accounting for a huge chunk of their portfolio. So why does Buffett like Apple so much? Well, it's simple. Apple has a brand loyalty that's almost unmatched. This translates to consistent revenue for Apple, something Buffett always looks for. Apple's services like Apple Music, Apple Pay, and the App Store are growing rapidly, adding another layer of recurring revenue. Buffett loves businesses that generate consistent cash flow, and Apple checks that box in a big way. Apple is constantly innovating, whether it's with new iPhones, advancements in augmented reality, or even their push into electric vehicles. This forward-thinking approach aligns perfectly with Buffett's investment philosophy of buying great companies with long-term growth potential. Remember, Buffett's not looking for a quick flip. He's looking for companies that will stand the test of time, and he clearly sees that potential in Apple. He's willing to pay a premium for companies he believes in, and in the case of Apple, he clearly sees the value. Next up, let's talk about a sector Buffett has always been fond of: banks. Bank of America, stock symbol BAC, is a major player in Buffett's portfolio. Banks are the backbone of the economy, providing essential services. Bank of America has a vast network of branches and ATMs. Buffett likes the CEO, Brian Moynihan. He's praised Moynihan's ability to navigate through challenging times. Bank of America pays a solid dividend, aligning with Buffett's philosophy. Let's move on to another financial powerhouse, American Express, stock symbol AXP. American Express isn't just any credit card company. They've built a reputation for exclusivity and premium rewards that attracts a certain type of customer. This focus on a specific, affluent customer base is something that sets American Express apart from its competitors. They're not trying to be everything to everyone. They're catering to a niche market, and they do it well. This resonates with Buffett's investment style of focusing on businesses with a clear competitive advantage. American Express is a dividend-paying machine with a long history of consistently increasing their dividends. But it's not just about the dividends. American Express is also a play on the growth of the global economy. As more people around the world enter the middle class and their purchasing power increases, the demand for credit cards and financial services is only going to rise. American Express, with its strong brand and global reach, is well positioned to capitalize on this trend. So, when you consider their strong brand, loyal customer base, dividend history, and growth potential, it's clear why Warren Buffett sees long-term value in American Express. Next up, we have Coca-Cola, stock symbol KO, the real thing for long-term returns. Buffett's love for Coca-Cola is no secret. He's been a shareholder for decades, and it remains one of Berkshire Hathaway's largest holdings. Coca-Cola is a classic example of what Buffett calls a consumer monopoly. They've got a product that's recognized and consumed all over the world. This kind of global reach and brand recognition is incredibly powerful, and it's a key reason why Coca-Cola has been able to generate consistent profits for decades. Coca-Cola has also been strategically expanding its portfolio to include healthier beverage options, like bottled water, juices, and teas. This diversification helps mitigate the risks associated with changing consumer preferences and ensures that Coca-Cola remains relevant in an evolving market. Coca-Cola is a dividend aristocrat. meaning they've increased their dividend payments for at least 25 consecutive years. That's the kind of consistency and shareholder-friendly approach that Buffett loves. So, when you combine a globally recognized brand, a diversified product portfolio, and a rock-solid dividend history, it's easy to see why Coca-Cola remains a cornerstone of Warren Buffett's investment strategy. Next up, we have Chevron, stock symbol CVX, an energy giant. Chevron, one of the world's largest integrated oil and gas companies, is a significant holding for Berkshire Hathaway. Isn't the world moving away from fossil fuels? Yes, but oil and gas remain essential. Buffett sees value in Chevron due to continued demand. They're major players in a sector that's not going away. Chevron invests in renewable energy and carbon capture. Their strong dividend history attracts income-focused investors. Let's look next at Kraft Heinz, a Buffett staple, but hold the ketchup. Let's talk about a company that's a household name, Kraft Heinz, stock symbol KHC. They're the folks behind iconic brands like Kraft Cheese, Heinz Ketchup, Oscar Mayer, and Philadelphia Cream Cheese, just to name a few. Now, Kraft Heinz hasn't been without its challenges in recent years, but it remains a significant holding in Buffett's portfolio. They've got a portfolio of brands that are staples in pantries and refrigerators across the country. This kind of brand loyalty and market dominance is something that Buffett has always appreciated. Kraft Heinz is also aware of the need to adapt to changing consumer preferences. They've been working on innovating their product lines to include healthier options, organic ingredients, and new flavors to appeal to a wider range of consumers. Now, it's important to note that Kraft Heinz hasn't been a home run for Buffett. However, Buffett's investment style is all about taking a long-term perspective. Only time will tell how Kraft Heinz will perform in the future, but for now, it remains a part of Warren Buffett's investment portfolio. Let's look at Moody's, stock symbol MCO. Rating the risk, reaping the rewards. Moody's is one of the big three credit rating agencies, along with Standard & Poor's and Fitch Ratings. These agencies play a crucial role in the financial markets by assessing the creditworthiness of companies and governments. Essentially, they tell investors how risky it is to lend money to a particular entity. Moody's operates in what's essentially an oligopoly. They have a dominant market share, along with their two main competitors, and there are significant barriers to entry for new players. This kind of competitive advantage is something that always catches Buffett's eye. Moody's is a cash-generating machine with a subscription-based business model. This recurring revenue stream provides a level of predictability and stability that's hard to find in many other industries. So, while Moody's might not be the most exciting company to talk about, their strong market position, consistent cash flow, and essential role in the financial system make them a solid addition to Warren Buffett's investment portfolio. Next, we have Verisign, stock symbol VRSN. Securing the internet, securing returns. Verisign is a global leader in domain names and internet security. They manage the registry for .com and .net domains, essential to internet infrastructure. They're the gatekeepers of the internet, ensuring you reach the right website. Warren Buffett finds this critical role in a vital industry attractive. The internet's growing importance means Verisign's services will stay in high demand. This translates into a stable and predictable revenue stream. It's easy to see why Warren Buffett sees long-term value in Verisign. Next up, we will look at Kroger, stock symbol KR. Stocking up on a grocery giant. Kroger operates thousands of stores across the country under various banners. The grocery business is a classic example of a consumer defensive stock. People need to eat, no matter the economy. This provides stability and resilience to Kroger's business. Consistent demand appeals to Buffett, especially during economic uncertainty. Kroger adapts to changing consumer preferences and embraces technology. Last but not least, we have Mastercard, stock symbol MA, riding the wave of digital payments. Mastercard and Visa dominate global electronic payment processing. The world is moving towards a cashless society, benefiting Mastercard. More digital transactions make Mastercard's network valuable. Every transaction generates revenue, which will grow with digital payments. Mastercard is expanding in emerging markets, capturing a share of the market. Warren Buffett sees long-term value in Mastercard's global reach and market position. So there you have it, a look inside the mind of Warren Buffett and 10 stocks that have earned a spot in his portfolio. Remember, these are just a few examples, and it's always important to do your own research before making any investment decisions. If you like this video, we bet that you will like the 2 videos now appearing on the screen. Go ahead and click on one of them now to continue to grow your knowledge and to better educate yourself to succeed as an investor. But the key takeaway here is that Buffett's investment philosophy is all about identifying great companies with sustainable competitive advantages, strong management teams, and a long runway for growth. By focusing on these fundamental principles, you can increase your chances of achieving long-term investment success.